Hi guys, welcome to Crypto EMC. Today we're going to be talking about a couple of BTC holders that got liquidated. I've got a few interesting charts I want to share with you guys, and backstage is a special guest. So she is itching to come and talk to you about Bitcoin, and I think she's got a couple of alts there. Let's see, maybe she can throw me a hand gesture. Do you have a couple of alts there? I think so. Yes, she has. She has a couple of alts, so she wants to talk to you guys about that. So enough of me. Let's get into this, guys. Right. We've got some massive liquidations that just played out. So what do I have on screen here is a BTC chart. It's Bybit on the daily. I'm just going to use the Bybit chart. So what do we have here? So top is BTC's price. Then we've got the buy-sell volume, open interest and liquidations, and then obviously the funding rate. So I'm just going to expand the liquidations and just talk us through what happened. I think everybody basically knows, and if you were leverage trading, might have felt it if you're trying to go long. So leverage trading, as you can see, the last few days has been really horrible for those on the futures platform. A lot of liquidations taking effect. I think for today's sake, this is really a promising sign, as fewer and fewer people are being affected about this pullback, which gives us hope there might be some uptick. So hence the tile bull recovery. Is this going to happen? So now let's look at some additional indicators before we move on. So we've got the fear and greed index that went from greedy now all the way back down to neutral. So people are definitely sitting on the fence, not sure. You're either in it and hoping, or you're not willing to get in at this stage, thinking that it's maybe over. So we're 50-50, which makes it really hard, because if you think about this, if this was a rope pulling event, that little flag marker that's in the middle of the rope, that thing's going to now just move sideways. It's not going to go anywhere. That's the worry. So we need one of these sides to win in order for us to get our next big move. So my hope is, personally at this stage, I'm not going to share it now. I'll share it a little bit later. So let's move on then. Social index as well at this stage. Everybody is sentiment, influencers and so forth, still very bullish. Now, guys, it's worth noting that when BTC was at 16K, we were serious about saying to you guys, it's time to get in. This looks good. And when BTC was at really good highs, when we founded this YouTube channel, we expressly stated it's time to take profit on a lot of those alts. Now, the thing about being popular means that you sometimes have to say what people want to hear. It's okay. It will go up, buy the dip, and so forth. We tend to prescribe to the unpopular vote. We don't say what you want to hear. We say what the chart is showing us. So just take that in mind as we go forward. Okay, so I want to bring up this chart. This is something that I don't know what's the right word. From Glassnode. So basically, I need to change my mic apparently. Let's quickly see. Yes. I want to throw this camera away. Now my mic is good. Thanks, Peter. Appreciate it, buddy. So this is the chart that I looked at. And what is interesting is if you look at this chart, basically it tells you where all the short-term holders are versus all the long-term holders and coins that are on the exchange. And when we look at where the all-time high was, you can see that the majority of new short-term holders, these 3-month-old Bitcoin and so forth, is sitting below 20K, or the biggest volume, and we're reaching about 30K, and this is where the average is. Now, the question that I want to, or the thought that I want to place with you guys at this stage is, these short-term holders, is this not a good time for them to start taking some profit? And if we look at where the majority of the late entries happened, it is between the 27 and 30K. So it's these people between these ranges over here that's currently underwater or under pressure, hence the liquidations. These are all the long-term short entries that got liquidated. Now, if we were to put this on a scale, you would see that the biggest majority is down here,
And from this point onwards, it's slowly increasing as price is going up. So is the worst over? Potentially, yes, for now on liquidation level. Doesn't mean if the price starts falling into the low 25Ks that things can't get dicey. But that is what we're looking at now. Now, in addition to this, I want to show you guys this Glassnode chart. And basically, it's showing network activity between changing hands of BTC. And when we look at changing hands between long-term wallet holders and short-term wallet holders, you can see that this is at its highest point. So highest point meaning same heights as where we were in the height of previous bull markets. There's the 2017 bull market. There's the 2017 bear market rally, if you want to call it that. There's the current last bull market we were, and so forth. So we're at really high network activity levels. So it brings the question, is there a big shift in wallet activity? And is there a big take profit event happening at this stage? And is the bull run or this winter relief rally that we have maybe over? We need to think about this and just keep that in the back of our minds. So moving on forward, I'm going to bring up the point and figure chart. Now, the point and figure chart basically just shows us gaps of where volatility is going to, where there was extreme volatility, fast movement, and a low trading volume, because that normally acts as magnets where whales would go and defend their actions. Meaning if they went long aggressively, it normally happens when the market is not ready for it. Then it runs and everybody jumps on the bandwagon when there's momentum. And that's basically what this shows. It shows the market wasn't ready, wasn't looking potentially. And then right at that point there, they start pushing and then the market jumps on. Remember, the more participants, the more comments, the more back and forth a negotiation will have. And that's why it starts going choppy. This is then everybody deciding this is the top, this is the short, this is the top, this is the short. And now, if we look at this retrace, what's happening at this stage? Something initiated a big sell-off. Someone, some wallet, whatever you want to do, however you want to call it, engineers, the exchanges, whatever the case, whatever the fundamental excuse you want to use. But this initiated this massive sell-off. And now, where will the defense be? The first big line of defense? Potentially there, where the previous big move happened. And that's why I'm still keeping my fingers crossed for this 25K. Something just to explain and to give you guys a little bit of context. We were screaming buy 19.2 using the same chart, the same method within the point and figure chart. And we were sitting at around 25K the last time around. We said, wait for the 19K, and that's where the gap is. So we're doing exactly the same. So from a bigger point of view, or from a longer term point of view, you just need to understand that these gaps are magnets. It's going to try and drag the price there because that's where the big whales are going to take interest. And in order for them to take interest, everybody else needs to bugger off. That's just the way it works. Get liquidated, give up, or just don't care. And that's when they take interest in this. Okay, so moving on to the next chart, and this is also quite interesting based on this. As you can see, when we look at this chart, it's giving you the hodl plateau, basically. So basically what it is doing is it's telling you where long-term buyers are coming in and they're holding their coins. So when we look at the previous cycle, let's go to 2017. It's easy to look in the past and project to forward because that's how we create trends. Normally what happens is when we create these amount of hodling, you can see that price then moves upwards. It's trying to reach to that point where the supply then brings those hodl portfolios, the lack of new supply or the absorption of supply, accumulation, brings the price to that levels of where the mass hodling occurred. Okay, because that is now everybody holding. There is no more supply entering the market. And it's normally when we get to that point that short-term investors start taking profit. And if we look at this from a big point of view, we're not even close to that pivotal point where we can say there's enough short-term new users to say that, you know, bull market's over and so forth. Do we really want to call it a bull market? I highly doubt that, but it's just worth noting that as the nature of BTC, the halving events and those come into play, and more BTC supply, the amount of BTC supply gets reduced, that gets mined daily gets reduced, we'll find that this metric, the long-term loss metric, everybody that bought there, it's going to slowly start evening itself out. So from a macro point of view, we could potentially say that now where we're at, 15K is probably as low as it's going to go. And if we were to retest the lows, 15K would be an amazing opportunity to get back in, to add to your positions or to farm towards. Just keep that in mind. Right. Then the next one here is also just a different way of showing exactly the same. So we can have a look at this area. This is where the most short-term holders entered the market, the newbies, people buying on the hype of Bitcoin in its prime, in the height of the bull market. And those guys now have been surpassed. So whoever wanted to get out or give up have now given up. And they're in a situation now where most recent short-term holders are slowly but surely turning into long-term holders. So it means that this 20K buy level, well, we will see that a lot of these short-term holders now turn into long-term holders as well, which is really positive and is really good for us going forward. Doesn't, however, mean that we can't have our take profit events. So let's talk about this chart now. Let's talk about Bitcoin recovery from my point of view. I want to go through this quickly because I can't wait to bring up our guest. But before I do that, guys, I just want to ask you to do me a solid and just hit that like or the thumbs up button. Give the channel a subscribe if you're new to this. We drop these live content like this weekly for you guys, okay? And alternatively, head over to our Discord channel. Just scan the QR code on screen where we spend a lot more time with our with all the frenemies, and we can actually converse. You can send me a message, I can chat with you, we trade together. It's a really nice, safe space where everybody can just surround themselves with everything crypto. Right, now back on to point. Bitcoin recovery. So looking at Bitcoin's recovery, bring this back. What I'm looking at on the weekly time frame, and we need to remember that from the weekly time frame perspective, the argument was that we were really bullish here on the basis that we had an additional capitulation event. Somebody dropped it in the comments, waiting for capitulation. Who was that guy? Let me quickly. Fallen Angel. Well, a capitulation event would be nice. So we had a massive capitulation event. This was the FTX going offline. I mean, that was a crazy, crazy moment in crypto. Stable coins started taking hits again. Everybody was uncomfortable at that stage. But when we look at the technical analysis, we try and throw away all the emotional parts of being invested and trading in crypto. We could see clearly that the RSI, the relative strength index, is showing us there's power here. There's accumulation occurring and there's some massive buying behind this fear. And subsequently, there we had the rally. So if we look at this thing from a macro point of view, big picture, let me just take that away. Big picture, we're looking at BTC, bull market. There's the weekly. RSI is telling us the strength is going away as price is going up. Okay. And we look at this now from where we are now, from what's it, November last year? The RSI at this stage is not giving me any reason to think that within a week or two, whatever the case might be, you know, weekly time frame wise, that the momentum cannot continue. There is nothing bearish about these weekly candles yet. It doesn't mean that it can't be bearish come Monday or Thursday. These are the risks that we need to take, but there's nothing bearish on the weekly yet. Something interesting worth noting, we're going to zoom into this real quick. So if we look at our BTC, the last big BTC break that we have, our best buy strategy that we can use when you have a big move like this is the one where we say, you know, go to where the candle that makes the higher high, 50% retrace of that candle, that's the buy. So I've got it written down here, it's scrolling in the bottom of the screen. Now, normally how that works is, if you take the top, the bottom, you put a normal 50% fib on that, what you will find is the argument is that interest is going to come back at around 25.1. I've got a target 25.5. Look, this is a guesstimate or estimate. Doesn't mean that it's going to hit that to the T. But just to give you an idea, there's the candle that made the higher high, okay? 50% of that candle is the buy. That's what I'm talking. And that's normally how price steps up. When price goes up, the bulls are very structured. They tend to climb the steps. Bears want to jump out the window for some reason, but the bulls like steps. And that's where we can use these structural methods that they use to our benefit to try and see where they can go. So if we're looking at big fear and we're looking at when maybe the mess can stop for a swing, that's going to be my best guess. Okay, moving back, I want to now take BTC onto the daily. Now, if you look at BTC from the daily point of view, what do we have? We had our 19K buy, the last swing buy that we're looking at. Okay, so that swing buy all the way to the top. If I were to put a normal fib retracement onto this, I'm going to take it to the bottom, to the top, just a normal fib retracement. We've now gone below the 23.6. So that's already saying to us, it doesn't say that it's over, it says consolidation and a retrace is imminent. That's something that's worth noting. And where would that normally go? 38.2, 618, somewhere in between. In this instance, the 50% is where I think, my money is at. Now, if I delete this, or I can leave that, and I do the same on the RSI to try and see whether we can potentially get a hidden bullish divergence, because that's what we want really. In order for this move to go, we need hidden bullish divergence. Hidden bullish divergence is a continuation divergence. Let me quickly see, there it is. Hidden bullish divergence continuation. Price makes a higher high, but the oscillator makes a lower low. So the way that will look then is the RSI is already accelerating quicker than price. We've lost the 23.6 on this move, but the RSI is already at the 618. So this gives me hope. Hope to the narrative that maybe this is what we get. That makes a lower low and price makes a higher high at that critical area. And then we will be off to the races again. So let's keep our eye on that. And then the last thing that I want to share with you guys before we really know, before I bring on our guest, is our 50% gone rule. And what is that gone rule? Well, if you look at the move, gone says clearly, let me just delete this one. And I can actually delete that one. Gone says basically to us, the time it takes for a move to create, 50% of that move, price will retrace to 50% of that move in half the time. So how am I going to mark this out on the chart? So simply, I'm going to take a fib, I'm going to put it to the top, and I'm going to say, okay, right, where's my 50% price point? It's around 25.3. What I can do is I can just put a line marker in there. And let's maybe make it pink and make it nice and thick, and we can make it solid so you can see it. And let's delete that away. So there's the 50% price line. And then what Gone also says, half the time. So the way that I'm going to do is I'm going to use the time fib tool, and I'm going to take it from the top, of the bottom to the top. And then I'm going to go to my settings. I've already got it set up. So I need 0 because that's where I started. I need 1 because that's where I'm going to end, right there at the top. And then I need 1.5, meaning this times another 50%. And that's that line there. So when I do that, you can see that this retrace potential time frame is potentially going to be around this area, around the end of the month, maybe another week or so of downward momentum. Doesn't mean that nothing goes down in a straight line though, guys. So it doesn't mean that this can't happen in order for this to continue. We know that the last wave of a correction is normally a 5-wave and not a 3-wave structure. Okay, now that's it. Are we going to get a low liquidity dump? I don't know. Play some low orders if you can. Yes, if you can afford to take the risk, definitely do that. So yeah, and I think I've answered the divergence on the RSI thing. I think one more thing, Syed, maybe what we can do is we can look at the 4-hour. And I want to show you this 4 hour. So on the 4 hour time frame, that is the divergence. That's why I went long there. So I went long at 27,900, and that's based on this low to this low, making what? A higher high on price. That's all that it is. So it's strong bullish divergence. I want strong. I don't want to trade any other divergence, because all this momentum, I would want to see it turn around. Simple as that. Okay, so 4 hour, the big picture is as follows. This was the last area of demand. So potentially what I will do is, I've got my buy zone marked out at this area. So I'm going to keep this channel as the idea of where my fourth wave, if this is what I want to call it, fourth wave on a 5-wave Elliott wave impulse to wherever we're going to go. This is the idea that maybe we can go there or there. That's my target line for now, 29.6. The lower we go, the lower my expectations needs to be, because we don't want to get out of this channel if we want to go lower. Get out this channel, thing flips bullish immediately, and we have to change our analysis. Okay. So for me at this stage, the price point is there, and the argument is that we need to hit that potentially by the 23rd of April. Meaning, same rule, let's just do that 50% of the time. There. We would want to try and get a good move up there for that 50% level to hit. It's not an exact science, guys. It can be around that zone. But now you've got some framework to plan around, okay, to understand how things are going to move, okay? So that being said, this is still the end area. This is still the end target. Now, guys, if you want to see Val, I need Val now in the comments. Or if you don't want to type that much, just give me a 777 so that we can bring on Val. While that happens, I want to talk recession real quick. Recession. Bring this up. Now, Federal Reserve dropped this a while ago, and I was thinking, not doing anything or not saying anything about it, because we now know that these guys are, you know, what they say, sometimes when the news come, it's too late. We were not in a recession last year, and the bloody thing fell into pieces. You know, they were constantly selling the idea of hope. But now it's the opposite around. Now they want to say, hey, stuff is going to go to pieces, and we've just come off the best probably 3 months that Bitcoin had in a year and a half. Okay, so it just normally doesn't sit well with me when we look at these things. But that being said, it's been said. Now I want to show you guys this little chart. It might look confusing real quick, but it's on the basis of how divergence works. Oh yeah, and before I do that, the reason they're saying this, guys, is because the earnings reports for the S&P 500, they're expecting the next quarter to be 2 quarters of negative earning report, meaning that the companies on the S&P 500 aren't making more profit, they're making less profit than the previous quarter. Now, it's 2 quarters in a row, so they're expecting an earnings recession, not necessarily a total economy recession. So just to give you a little bit of context, to put that fear into the correct size box that we would want that to be. Okay, so with that being said, now I'm going to go back to the divergence thing. I just want to show you this little trick. Okay, so what we want to see is divergence, obviously, to see whether this is going to happen, whether we are going to have a little bit of a retrace. The market likes to do this. It likes to give us that scenario where it allows you to be right occasionally, so it can trick you so that you get to be wrong consistently. So remember that. So we're looking at divergence, and what divergence is it's normally between price and oscillator. So now this time I'm going to do it just a little bit differently. I'm going to say I'm looking at the Dow Jones, which is the top 30, and I'm comparing that performance to the top 500 to see whether there's a change. Now, normally what happens is these two lines it's just the price of the S&P 500. I just switch it to a line tool and the Dow Jones, and I've laid them over and I've turned them into percentages, because obviously they priced at different increments, different indexes priced differently. So if I switch them to percentage, at least it's going to move them up. Now, what do we know when we look at this? Well, when you have the S&P 500 making a lower low and the Dow Jones making a higher low, that's bearish divergence. It's showing you that something is off and that the trend, which was up at that stage, is going to change. That's all. And it did. As you can see, gains are down. And when you get to the bottom, you'll see the same. You'll see that between the Dow Jones and the S&P 500, there's a lower low and there's a higher high. It's telling me the trend is about to change. The market has reached an extreme and an unbalanced nature, and now price is going to want to switch around. And what do we have at this stage? We've got the market giving us the same divergence. S&P 500 making higher highs, the Dow Jones making lower lows. Okay, so the trend is about to change. Doesn't mean that its effects immediately. Remember, this is daily, and it's something that's just worth noting. So there is some warrant behind the fear, but is that retrace? What we need to just get BTC down to a reasonable good area where new interested buyers are going to want to take over this 25 area where the lowest volume is that? I think so. So that we can definitely go into an area where these long-term guys are going to move into a situation where there's some hope for them, and then that hope gets destroyed because the market looks for the most painful way of going about its things. That's just what it does. Right. Guys, that's everything that I wanted to share. Now I think it's time to bring on Val. There's seriously a lot of guys, more comments for Val than me. I can pretty much just make this a Val stream, and maybe I should take off a week. Val, what do you think?
Hey, yeah, that would be a lot of work for me for a week.
Yeah, how are you doing, Val?
I'm good. I'm good. You've presented some very beautiful data. Loved listening to you. And I agree with pretty much everything that you said. I'll share my charts now. Can you see it?
I can see your chart. So what are we looking at?
Okay, so we are looking at the same chart of BTC on the 3D chart. So it's the 3 days chart. With the strategy of the moving averages and where we have to move next, right? So as discussed, as long as we have the support of the 50 and the 100 moving average, our target will remain to be the 200 moving average. Of course, while time passes, right, the moving average is also coming down. So that means that whatever happens here, I will not jump into that part yet. Whatever we retrace and bounce, when we come up, depends on how much time it will take, the moving average will also come down. So it can be, for example, a double top at that point, right? Or it can, I don't know, continue to move up. In that case, it will reject some higher somewhere here and then move to the 24, 25K. But as far as the strategy goes, this will remain the target, the 200 moving average. Okay, as far as our current price action, basically, I discussed a lot of times that I expect a pullback, not I don't know. I don't expect this to go to new lows personally right now. I only expect a pullback. And the reason for that is the volume weighted average by price. So what we have here, well, this average, right? This moving average, it just consists of measuring something else. The price volume will act as resistance. Why? I explained it in the previous video. I will show an example of how this acted before. So we rejected, for example, on the monthly right here, and this instantly went down. So for us to move higher, what should happen? Well, we have to turn this moving average by price weighted into support. This is what I'm trying to say right now. And to show you some more examples of the past. The best examples are here. We just have more data. So when we reject from this moving average, it usually goes into a pullback, or we could do something like this. So rejected, a period of consolidation, then we break out, then we come retest it as support, and we move up. What would that mean for us right now? As far as this indicator goes, we could have a period of consolidation here below it, without going to retest 15K again or new lows, etc., right? In my opinion, 24, 25K should provide support, at least for the first push. I don't think, even if, let's say, I'm wrong and we are going to new lows, I do not think it will just happen like bloom, like that, you know. It will still go gradually in a manner.
Yeah, waves within waves.
Yes. So I think we will find support here at range highs, which is around 25,300. It depends on the exchange, really. So a period of consolidation is possible here, retesting that level, coming back up a few times like we saw before, and then moving up and retaking this moving average and pushing higher. That is one possibility. Another possibility is the possibility of the downside. Everybody is discussing which, as I said, right now, I'm not considering it. Anything is possible in trading, that is correct. But if we only start taking fear into consideration and always expect the worst, it's very hard for me to understand how you can actually take, you know, a trade then based on that.
You have to be brave. That's correct. I actually like that, guys. You have to be really brave about trading. In any case, if you want to have gains, you need to take risk.
Yes. And for example, if you do not want to take the risk of entering, let's say here or something, then because it is a choice, obviously, then you will have to take the risk of holding on to your swing positions, which you entered, you know, much lower, and risking the unbooked profits, right? What would you lose in that case? Well, obviously time. You would have been losing the time and the profits that you didn't book. But you are not, yes, but you are not losing the capital, because I personally don't treat trading as an everyday income job or something like that. You know, it doesn't have to. It would be ideally for you to generate daily income, but I don't perceive it like that. So it's like a long-term investment in a way, right? And it will seasonally give you profits. So I'm more like season focused rather than like weekly or something. I don't have such, you know.
We tend to say I tend to say is you don't get paid by the hour, you get paid by the trade. And you need to think
exactly.
Of that. You know, it's not the same way as conventional trading, the way or conventional job. You don't go to work as a, you know, or study trading, you know, in that sense, as you would do for a job, a skill. Well, I'm just saying all the wrong words, but you guys get the idea. That's great.
No, I understand. So I personally like to assess my trading results seasonally, right? So it's like a season. It can be 6 months or 3 months or a year. It really depends on what is going on. Right now, I would be assessing, for example, my profits or losses or whatever, probably, I don't know, in the summer somewhere, right? Which I started back in late autumn when the market turned around. So, well, that is besides the point. Right now, what I would be looking at and expecting was a flush, which is kind of looking like a flush so far for the longs. Everybody who entered, you know, here, back to this support. So around 25K, I personally would be laddering on a good reaction 24, 25K to enter back into longs. I did not sell a lot. I sold only at 25K, what I bought down here. And I sold more Ether than BTC, actually. So for BTC, I will just add back basically what I sold, let's say, probably. The rest, what I would be waiting for, well, I will be waiting for the 200 moving average, where I will take the profits, and then for a possible move higher into the golden sell pocket. It depends on how the price action will develop, obviously, and possibly here into these highs. We have
that golden sell pocket of yours. What's the price point there?
So here is 39K. The sell pocket.
So it's
39.40K. Yes, and the next target would be around here, about 48K. I have my letters at 44 for now, in case, yeah, I put them up front, so I don't forget to, I don't know, sell or something. I have a habit of putting the sells right away. So I'll show you why.
It's good, because then it means that you're not going to let the emotion of the ride dictate how you feel at that stage, because that's when we tend to say, yeah, buying at 15K seems nice, but now it's 30, and now you think, but what if it goes to 40? And then you
honestly, usually, like if we talk about statistics, in 80% of the cases, when I decide to change my targets, is wrong. That's a wrong decision, right? I should have never touched them. So maybe 20% are like, oh yes, it did go higher or something like that. But 80%, what I calculated is what I got, and I should have sticked to the plan. So I regretted moving them. This is what I was
in the comments, guys, let us know who has also made that slip up. Mid-trade, decide that there's now more in it. And how did that play out for you? I'll be interested to see.
Yeah. Well, it depends. It depends on the market, obviously. If it's a strong bull market like we had back in 2020, 21, obviously, those targets, those higher targets hit. But in the rest of the normal conditions of the market, it's usually a bad idea. So you should stick to the original plan. This is what I believe. So I'm explaining.
That's smart. I like it.
Yes, with the LTC chart, because we said we will be talking about ELTs. So it is possible that
some guys are saying mid-trade disaster for me, and always wrecked when you stick to the plan, when you don't stick to the plan. So
yes,
it's the way trading works.
Yes, you should stick to the plan every time. I already said, every time I think something is better, or I don't know, someone sees things better than me, or their point of view might be better, I regret it personally. Everybody should stick to their, what they see in the chart, because even with a friend, I shared today a few charts, and he's like, well, I see this head and shoulders, right? And I'm like, well, I see the inverse head and shoulders. So we see the chart completely different. So
you have to have, actually what you're basing, you have to have that confidence in your own abilities, because in the end of the day, when it comes to pressing the buy or the sell button, it's just you. So that is important. So even if you get to be wrong, be okay with that, and maybe your friend gets to be right and we get to be wrong. I thought maybe today you're going to have an opposing view to me, but maybe we get to be wrong this time around. That's the way the market works.
Yes, obviously. The thing about the market is everybody's like, well, how it is going to go? The price can go in very, very many ways. Sometimes I think I'm in perfect sync with it, and I can see very clear how it will develop. It doesn't mean it will go like right by the tick, but approximately. And sometimes it just does something I completely don't expect. And then we talked about that before too. I just take a break and I wait it out until I don't have to always see exactly what will happen. Sometimes I don't. And I simply stay out but when I feel like I want to give it another try, I come back and I look at the chart, and without forcing it, things just come to you naturally, right? Because probably with everything we studied, the brain is trained itself to pick up and to see the things that he wants to see and understand. Yes, and understands best. So I just let it do its thing. I don't come into it too much. So like right here, the same strategy that we had and we discussed about Litecoin, and my advice to buy around $70,000. So the idea here is that we had this range, for example, for Litecoin, and then we didn't touch the 200 moving average on the first go. We came back down to retest this range high, let's say, in a way. Well, it went a little bit deeper, but it didn't lose the cluster, and it moved back into the 200 moving average. So basically it reached its goal for this setup that I explained with the cluster and everything. So that taking into account with BTC, for example, what we could expect is something similar. It could flash down, right? Bounce somewhere the monthly pivot, or maybe the yearly pivot. I don't know exactly where it will bounce, but my guess is 24, 25K. And then it will move up. It could be something of a double top here because the moving average will come down. And after that, we will see Litecoin for now sold off. I don't know what BTC exactly will do. I would like it to progress higher. If we look at the history...
I've got a question for you on that. If you can quickly go back to your screen where you were now, because you showed something interesting here. Basically, what you're doing is you're basically showing us a fractal play. So you're looking at Litecoin in
yes.
If we take into
account the Litecoin discussion, yes, it's like a possible fractal, like what to expect, how it could develop. But that is
so the
because
question that I actually want to ask you, if you go back there, is say what's your opinion on this? Say Litecoin gets above the 200 MA on your 3-day.
Yeah.
Will that give you? Yeah, because let's say now this is the way it works. It now goes to your 70,000 again, or your next target, and it gets above the 200 MA, because in Litecoin's instance, already above it already touched 200 moving average on your 3-day.
Yes.
And it gets above it, and most of the alts do the same. Would you then expect BTC to reciprocate and do the same, go above the 200, and then validate higher targets, or don't you look at it that way?
Yes, I would, because again, for that I need the history to explain why. So every time we moved to the 200 moving average and rejected it on the 3D, once we got accepted above, it pushed higher. Just need to find.
That's really good.
It's not this chart.
That 42K we're hoping, because it's definitely going to have to get above that 200.
Okay, this is the Litecoin chart with the strategy. That was, the Bitfinex chart. I use the Bitstamp chart. It's a bit more clean. So yes, basically what's happening right now, it will, what I expected to happen, if BTC will pull back lower, obviously Litecoin will also go lower. I don't think we will lose the 3D cluster right now, and I hope we will hold here around the 100 moving average. So the same $70 region. This is like if Bitcoin goes to 24, 25, and then it will reclaim this 200 moving average, I believe. Because if we look, I've marked that on the chart already. So back in 2019, we rejected here on the first touch. Let me zoom in so we can see it. We rejected, we came down, we held the fib, 3H2 fib, and then we pushed into the golden pocket. So I then observed the 2020 chart. We have the same thing. We pushed up, it came down. It still, somewhere hanged around this cluster. We did not lose the 3H2 fib, and then we overtook the 200 moving average. What does that currently mean for us? I would need to extend it, the fibs a little. Hold on just a sec. Okay, like that. Okay, the problem is that we are rejecting right now off the 382. So to repeat the same pattern, what we would need, not to lose 25 fib at this point, so where this cluster is the 100 moving average, the low of the cluster, retake the 200 moving average, basically find acceptance above the 3H2 fib, which we had on these two other occasions. So here with the black one and here with the blue one. And then I'm 100% sure it will push up to the sell pocket to around $170, $180. This is what I expect, because the price action is also very different here from 2018 here to in 2023. If anything, I think we are a little bit more similar as the structure to this part here, rather than this was just a parabolic move here. This is not a parabolic move. This is like range, then, you know, pushes up, pushes down, up, back to the range.
Actually fills the gaps. You know, when you look at those range testers, it goes to the previous tops. The previous tops becomes the bottoms, you know, where that one's just one move.
Yes, here is just one steep move, you know. So the idea is that, yes, for Litecoin, I'm still holding partially, and I will be selling here in the golden sell pocket. If we take that to the BTC chart as a fractal, let's say, example, so yes, that would also, this is what could happen. So it could retest the 24-25K, take over the 382 fib back again. It didn't even lose it yet. So that's like hypothetically speaking. And then turn the 200 moving average into support. This 200 moving average coincides plus minus with the monthly volume weighted average by price here at around 31K. So it would turn into support this one and the 200 moving average. So that's double confirmation, you know, like you use the divergences. For me, this would be another type of double confirmation for the further upside. But right now, I'm not getting super bearish, and I really don't see a reason to panic. I view this as a healthy, normal pullback flush. I would have preferred it to be faster, not so slow. Yes. Yeah, so I would have preferred for it to do something like flush, you know, consolidation, something like this, and then up. Well, maybe on weekly it would look like that. I would have preferred like on daily or 3D max, you know, something like that.
Yeah, it's definitely not doing it. It's grinding slowly, giving you hope. It's the worst time for a trader, because then, you know, it's like, oh, come on, just get there so that I can get into the next move. You know, we tend to want to be impatient. We inherently like that. So
yes, but we could also look at some stuff on the daily with the previous moves up. It doesn't matter if they were short term or not. For example, on this rally in 2019, we did not lose the 50 and the 100 moving average on daily, because once we started to lose that, it's back to the cluster base, you know.
Yeah, the bearish narrative from everybody, you know, this is crossing over, you know, it's really bad, you know, all that talk.
So when we look where the support is for this cluster 50-100, we have 24,800 and 26,800. Currently, they will continue to move up. You know, this is shorter time frame too, so they will get up faster because this is daily. So again, this is another confirmation for the 24-25K and why ideally we should not lose it. Obviously, I could probably take into account if there is some kind of liquidation event starting to push everything down really bad. I could allow a week, you know, through that area. That would not be a huge problem. But we are talking about closes, about like obvious shift in market structure and, you know, in the trend. This is what I'm talking about.
Well, it's been really awesome having you, I have to say, and I think everybody in the comment section throw some love to Val. Twitter handle is @ValCoins. I actually don't have it here. Let me quickly see if I can quickly just type it in. I'm going to be really quick. See if I can create a banner. It's @ValCoins.
Yeah, it's just ValCoins.
Coins. Yeah, you never know. @ValCoins. I'm a man. I can't spell to save my life. @ValCoins. There it is, guys. So if you want to go, please go and follow Val.
One more
Yeah.
little thing that I wanted to discuss, and it just slipped my mind, is the dollar chart. Just a sec. This is important.
See, I already spelt it wrong. So while you're getting that ready, I'm looking at your Twitter page here, and it
Okay.
was wrong. So there
Yeah.
you go, guys. That's the right. Okay, just show me. What are we looking at?
So this is the dollar chart, the monthly, right? So currently the monthly is trading in a congested region here in the range. I just have the fibs on it and all the supports and everything. Let me take out the moving averages because we don't need it. Okay. So basically, everybody is super bullish on dollar for some reason. I don't know why. From what I see, we lost the yearly pivot. This is not bullish until this is reclaimed around 104, 105. The pivot is 14.3. So 1415 should be turned into support for dollar to be bullish, in my eyes at least. Until then, this is the range high, some kind of structure above, we can call it a deviation or not. We have this range low with a bounce in 2021 off the, around range lows. It doesn't always have to touch it to be valid. It can be slightly above, no problem. So right now, I don't see it so bullish, especially on the monthly. It attempted to turn this range high back into support, and it failed. So until that level is reclaimed, 1415, I don't see a reason to get super bearish on crypto and bullish on the dollar. Even the 2 weeks chart is looking, I don't know, weak, let's say. And the weekly chart is also looking very weak. I mean, the best we can expect, in my opinion, is still a move to 97, somewhere there, 2021 yearly high. Fill this monthly fair value gap. And off there, I don't know, we could retest range high again. It would range here in this bigger range per se. But right now, I don't see any reasons to be bullish. I don't see signs on the weekly of reversal. People speculate this could be a double bottom. I don't know. Let's say it could be. So maybe it could do something like, okay, double bottom and what? Another move here. So it will be like another structure and would still move down, in my opinion. Because if they turn the yearly pivot into support, it would need to do something like this. And then it can move higher. I don't know where. They are aiming for
it just doesn't. It's like Bitcoin 30K BTC or 29K BTC off the high mark. You can almost look at that from the 72K to the first area where it tested 34K. It's just sitting there mid area. Nothing is resolved. You don't have an accumulation. You don't have any lateral movement in that. That's a possible beginning of it. But do we have a lower low between where it's touching on the fair value gap between those 2 points?
No, they equal.
Equal bottom. Okay.
Yeah. So people are speculating a double bottom on it. Again, it could be possible, but it's not enough. At least for me, to be bullish here on the dollar. It doesn't have any kind of bullish structure for now. The 3D chart.
Can the dollar go back up 102, 103? Yes.
Yes, probably.
That's what we need to potentially get BTC to 25K.
Yes.
As well. Just for all intents and purposes.
Yes, but dollar right now does not have some kind of wild strength, and I don't see reversal on it.
Short-term wise, guys, I'm going to quickly, Val, thanks. I just want to, short-term wise, I'm in a trade. I'm just going to bring it up. So I'm looking at this, and where we're at now, we've got 15 minutes, divergence, lower low, and if we lose this structure, potentially I'm going to bank some of this game and just call it a scalp. I entered around there just before we went live, and the argument is I just want to bank some little money, and this is on the copy trade account. So just keep an eye on that. So I'm going to be keeping an eye on that, and I'm going to be on the Discord after the stream. Val,
Yes.
any last thing you want to share with us, can we? Because we're kind of running out of time. It's 55 minutes.
Personally, I would advise people not to get too bearish ahead of time. It is okay to get bearish a bit later after you have some higher time frames confirmation. This pullback is normal and is to be expected. We can have a consolidation period and a consolidation, wider consolidation range on the monthly, as we have seen before, between 25K and 30K, which would be also fine. In theory, during that time, else could probably maybe hold a little bit better and try to move up. Some are moving up even today when BTC is trying to find some kind of support. Some else are popping right and left. I don't know if it's all season or not. I'm not focused on that, to be honest. I never am waiting for like altcoin season necessarily. When I see a good setup, if the conditions are right, I simply enter the trade, because otherwise we are going back to that. We have to meet 1,000, criteria to enter a trade. So we will never enter that trade because it's impossible. Yeah, it's just not realistic. So yes, then you'll have to just sit and wait for the confirmed bull market. So obviously you'll enter somewhere after 50-60% of the move is already done. So you are very sure. So you'll be catching basically the top. There are always risks. If the stop losses hits, that's not a problem. I believe it's part of the game. You should be thinking about what kind of strategy you prefer, first in and out, rather than just maybe sacrificing some unbooked profits to catch the bigger swing. It's a personal choice, to be honest.
You heard it from Val. I mean, you've enough said, basically enough said. I think we can leave this year and go and enjoy our weekend. Val, I really want to thank you. It was really awesome having you on the stream, talking charts with you. Maybe what we can do is next week, if you're not busy, we can schedule another one. So I'll talk to Val. I think everybody in the comments section would definitely want to see you back. Give me a 999, and Bitcoin just went and made a higher high. So I'm happy. So let's quickly see. And I see there, Val, simply a legend. Always appreciate her insight. Thanks, Val. So that's from Manny.
Thank you, guys. Thank you. That is very sweet.
So, really appreciate you taking the time and spending it with us. And the 999s are coming in now. So Val, definitely, I'll try and turn your arm and see if I can get you on next week. Right.
Sure.
Thanks so much, Val. You have a lovely day and enjoy the rest of your weekend.
You too. You too. Thank you, Rudo. Bye.
Right, guys. I think everything is said. Everything is said. Head over to the Discord. I'm going to be monitoring this long that I'm in over there. And yeah, thanks so much to Val, guys. I really enjoyed watching it. So Monday, we're going to be looking at seeing whether we're bottoming. Last time we had a big sell-off, also was on a Friday or leading up to a Friday. And we actually had a low liquidity rally over the weekend when least people expected, creating another CME gap. Remember, this rally just filled the previous CME gap. So keep an eye on that as well. Guys, in the comment section, let me know your thoughts, what you think, and so forth. I like to read them. I respond to them manually myself. So I'm happy to hear for that. Well, I'm looking forward to reading that. Other than that, you guys have a lovely weekend. And as always, guys, keep hustling.